0.50% Fed rate cut spells trouble for Bitcoin amid recession fears, 10 times research. Bitcoin Fed rate cut U.S. jobs as the September 18th FOMC meeting approaches. Analysts caution the impact of an aggressive rate cut. Last updated September 9th, 2024 at 22:48 GMT 3. Junior content creator Harvey Hunter. Junior content creator Harvey Hunter, about author Harvey Hunter, is a junior content creator at cryptonews.com. With a background in computer science, and mathematics, he seamlessly transitioned from tech geek to crypto journalist. Author profile share, copied last updated September 9th, 2024 at 22:48 GMT 3. Why trust Cryptonews? With over a decade of crypto coverage, Cryptonews delivers authoritative insights you can rely on. Our veteran team of journalists and analysts combines in-depth market knowledge with hands-on testing of blockchain technologies. We maintain strict editorial standards, ensuring factual accuracy and impartial reporting on both established cryptocurrencies and emerging projects. Our long-standing presence in the industry and commitment to quality journalism make Cryptonews a trusted source in the dynamic world of digital assets. Read more about Cryptonews. 10 times research cautions an aggressive U.S. Federal Reserve rate cut as a signal of economic worry, not reassurance, weighing over Bitcoin and other risk assets. In a September 9th note to clients, 10 times research CEO Marcus Thielen warned that the supposedly bullish liquidity easing cycle may kick off on a sour note for risk assets, while a 25 basis point cut is seen as the more favorable outcome, possibly leading to long-term price appreciation for Bitcoin as liquidity increases and recession fears ease. A more aggressive cut could have an adverse effect. A 50 basis point cut could signal deeper concerns to the markets, indicating a lapse in combating the impending economic slowdown. This might cause investors to reduce their exposure to risk assets like Bitcoin, something Thielen highlighted as no obstacle to the Fed's decision, as their primary focus will be mitigating economic risks rather than managing market reactions. While traders currently place the probability of a 50 basis point cut at 29%, according to CME's FedWatch tool. 10 times research cautions this, citing it to contrast their view of the prevailing consensus. Weak jobs data fuels recession fears. Recession concerns gained traction in early August when the Assam Rule Recession Indicator, which tracks economic downturns, jumped to 0.53 from 0.43 following weak July U.S. jobs data, signaling a warning of a looming recession. In the wake of the release of August's weak jobs report, these fears have been exacerbated. According to Fed data, the Assam Rule Recession Indicator has jumped higher to 0.57. 10 times research commented, the chorus is growing louder that the Fed is behind the curve, having missed signs of labor market weakness after being caught off guard in July. However, other analysts cite the weak jobs data as no obstacle. Alianza advisor and former PIMCO CEO Mohamed El-Arian commented that the latest numbers remain consistent with his belief that the U.S. economy will avoid a recession. Bitcoin could face a 20% decline under an aggressive rate cut. In a September 2nd report from Bitfinex, analysts warned that a U.S. rate cut could present a challenging time for Bitcoin traders. A 50 basis point rate cut could potentially trigger a correction, pushing Bitcoin deeper into its recent slump as recession concerns escalate. The analysts added, if we were to speculate, we would caution to expect a 15 to 20% decline when rates are cut this month. With a bottom of $40.50 for BTC, this view is consistent with past analysis from 10 times research, which identified the low 40,000 zone as an optimal entry point for the next bull market. Although Bitcoin price action may appear bleak in the near term based on historical and technical patterns, a six-figure Bitcoin is still in play. Popular trader Titan of Crypto pointed to the final quarter of this year as a potential breakout point, describing it as having epic potential for price action, a sentiment echoed by other analysts. Follow us on Google News.